Welcome to RANsquawk's EU morning briefing for Friday, the 29th of May 2009. Just gone through the Open now here in UK and Europe, and we're off to a slightly positive start. Firstly, looking back on how the US finished yesterday, the most notable news, attention very much on that 7-year note auction coming out of the US, which was met successfully. Obviously a lot of fears on that auction and its potential results, including foreign investor demand, giving a lot of focus at the moment on the yield curve in the US, having hit that 3.74% only two days ago. We're now trading back around the 3.6% mark this morning, and hence we have got higher fixed income, both bonds and UK gilt futures higher at the moment, following treasuries up around 10.5 ticks at last check. On a similar note to the yield curve, we did see as well on Wall Street the equities just going to show how important these supply concerns are for other asset classes. Again, Wall Street did finish higher, equities feeling some sort of relief as such on that successful auction, again finishing up there. That contributed to the Nikkei as well, hitting 7-month highs. We finished up there 0.75%, and we're off to a positive start so far here in UK and Europe in the equity space. Sticking on that theme, take a look at a Wall Street Journal article. They're commenting that Fed officials believe that the recent rise in US yields may reflect a mending economy and receding risk of financial catastrophe, suggesting then that the Fed will not rush in to react. Obviously the market was speculating yesterday they would need to indeed step up their purchase program in order to push that yield back down, but that journal piece opposing that, citing their insider Fed officials. Elsewhere, overnight, Fed's Fisher had some important comments. He said the US recession is fading, but the economy will not recover in a meaningful way before the end of this year, and deflation remains a risk in this climate. He said that the US yield curve may be steepening on supply concerns, but also increased confidence, and he does not think the US AAA credit risk rating is at risk of a downgrade. He also made note that US employment is likely to reach 10%, and does not see any evidence that China wants to significantly shift its dollar portfolio. Quite interesting there. We'll be looking out as well next week for Geithner's comments. He will be meeting in China, in Beijing. Elsewhere as well, coming out of the Federal Reserve economists late yesterday, they said that recent stress tests of largest US banks showed that they can weather the impending tidal wave of defaults expected in the commercial real estate market. And then sticking as well on the dollar theme in terms of the currencies, a few things that did draw some attention late in the US session yesterday. Coming out of the BRIC nations, they're to debate the role of the US dollar. BRIC nations may take unilateral action to lessen dependency on the US dollar. That was according to a Brazilian official. Brazilians have been quite bullish in terms of trying to step away or diversify away from the dollar in previous comments we've seen over the last few weeks, so nothing particularly new, but obviously still highlighting some of those ongoing concerns for the US dollar at the moment. Elsewhere as well, we have heard of reports overnight of a South Korean pension fund looking to reduce their dollar exposure and diversify. So still a lot of uncertainty in the market across the globe. Elsewhere, just a quick look in the UK markets. We have seen cable off to a pretty solid start this morning. We're up over 160.50. Data points are pretty much getting the attention here. Overnight saw release of GfK Consumer Confidence Survey, although still quite a big negative coming in at -27, the same as previous. It does show the highest level, or maintains the highest level we've seen in pretty much the last year or so. And more importantly, we've seen nationwide house prices coming in at 1.2% month on month. Analysts were actually looking for a contraction of nearly 1%, so a lot better there than expected. Again, house prices rising for the second time now in 3 months for May, slowing the annual rate of decline to its weakest since last August, according to Nationwide Building Society. Taking a look then on the schedule, looking at 9 o'clock now for Eurozone M3 and Italian PPIs. Main focus really for the European data will be the Eurozone CPI estimate, due at 10:30. That'll be due at 10 o'clock London time. Analysts expecting a 0.2%, so further contraction in CPI estimates for the month of May from the previous of 0.6. And then the main focus will be the US data today, GDP for the first quarter. We'll also be looking at Chicago PMI and then the Michigan survey. That'll be the May final report.